Hi, welcome. I'm Rob Bowersox, Regional Sales Manager with Keystone Custom Homes, and we are here today to review some of the most frequently asked questions about obtaining a mortgage to purchase a new home. I'm here with Brandy Traber of Finance of America and Shelly Burkholder with RMS Mortgage. Brandy, do you want to start off and tell us a little bit about yourself and Finance of America?
Sure. Thank you so much for having me today. My name is Brandy. I'm a loan officer with Finance of America. I've been in the mortgage industry for just under 20 years. I started in the operations department as a processor. I moved into the sales department about 15 years ago. And my favorite thing about working in the mortgage industry is helping people purchase homes and making their dreams come true.
Great. Thanks so much. Shelly with RMS, tell us a little bit about yourself.
Thank you, Rob, for having me on the show as well. I have been in mortgage banking just like Brandy. Started in the operations business or operations side of things, and I have been in mortgage banking for 30 years. So my favorite part of this job is also helping people get into their new home, and I like educating the buyers on the process and helping them determine what their the best program for them. So our slogan is, "We'll guide you home," and that's what we focus on.
Great. Thank you so much. Well, let's jump right into the questions. So for our first question, we have here, will mortgage rates be going down? Shelly, you want to take a stab at that one?
Sure. Thank you, Rob. I think that interest rates definitely have the potential to go down. We don't know how far, certainly we don't know when. We get a new rate sheet every day, and rates are impacted by the movement, trading activity on Wall Street. So the current economy, the current status that we're in is supporting these lower rates, and we're going to see these for a while. And they may hit those lower rates, but be prepared that the rates may be going the other direction. Look for a program with an extended lock program so that you are protected with these lower rates at this time.
Great. Yeah, great input. Brandy, what are your thoughts? Do you think mortgage rates are going to be going down from here?
I'm hopeful that we will see a little bit lower of interest rates, although they are really, really good right now. We're seeing the industry start to repair itself, which has led to a decrease in rates over the last couple of weeks. I think we're in an environment where we need to be patient. We also need to stay optimistic. We may continue to see some volatility with the interest rates, but I think overall we are at very, very lows right now. There is a chance we might see a little bit lower, but I also agree that if you're looking to buy something, just get locked into your rate as soon as you can.
Great. Well, and this question lends itself well to our next question, which is 4% a good mortgage rate? Brandy, what are your thoughts on 4%? Is that a good rate someone should go ahead and lock in if they were to receive that today?
Absolutely. 4% is an amazing interest rate. I think a lot of people are seeing that rates have been in the 2s and rates have been in the 3s, so they're starting to maybe be a little confused as to whether or not is 4% still good. But historically, 4% is an amazing interest rate, and everyone should be jumping at the chance to lock into a rate of 4%.
Absolutely. Shelly, what are your thoughts? 4%? Would you lock it?
Absolutely. Absolutely, hands down. My first mortgage rate on my first home was 13%. The second home was 11%. So today's consumer is spoiled with these interest rates being less than 4%, when the average interest rate has been 6% over the last 50 years. So 4 is still considered a historical low for me, and I would definitely lock at that rate and take advantage of locking in at lower rates that we have today.
Okay, so our next question is, how do you finance a new home construction, and what types of loans are available to build a new home? So, Brandy, can you tell us a little bit about the types of loans available for new home construction?
So there's many different options when you're financing a new construction home. One of the types of mortgages is called an end loan. That is a similar type of loan. It's really the same type of loan you would get if you were to purchase an existing home. The only difference between purchasing an existing home and a new construction home when it comes to financing an end loan is that you will be getting approved for the mortgage very early on in the process. The builder is going to expect you to have your mortgage approved before they'll start building the home. However, you're not financially responsible to make mortgage payments on the home until the house is complete and you've taken possession of it.
Thank you. Shelly, do you want to tell us a little bit about construction loans?
Absolutely, Rob. So with a construction loan, the settlement actually takes place before Keystone starts digging on your property. The down payment that you provide Keystone is used when you go to settlement, and you pay interest only throughout the construction. And then when the home is done, that construction loan gets modified into your permanent loan. And that permanent loan can be a conventional 30, 25, 20, or 15-year loan. It can also be an adjustable rate mortgage. But the loan program during construction is interest only. And at the very end, when your home is done, it modifies into that permanent loan that you're going to have for the rest of that term period you need, 30, 15 years, whatever that is.
Great. Thank you so much. Our next question is it hard to get a construction loan? Shelly, why don't you tell us a little bit about that? Is it harder to get a construction loan than an end loan or permanent loan?
It's not harder, by all means, not harder. The loan process for all loans is tedious. There's a lot of paperwork involved with mortgages, and that's just the way it is. But we do require a minimum credit score of 680 for construction loans, but we can also offer loan programs with as little as 5% down. And that's affordable for many people.
Great. Thank you so much. Brandy, did you want to add anything to that? Is it hard to get a loan in general? Is it more challenging now than it used to be?
Well, it depends how far back we're looking at. If you were to compare, is it hard to get a mortgage now compared to 20 years ago? Yes, it's a little bit more difficult to get a mortgage now. Guidelines have definitely changed over the last 20 years. However, aside from being tedious and having to provide some paperwork, the mortgage process is not something that you should be scared of. Your loan officer is going to walk you through the entire process. They are going to hold your hand and make sure that the process is as smooth as possible. The biggest thing is just to be cooperative.
Right. And when we talk about submitting additional paperwork, this is your protection as a buyer to know and have the assurance that we're not in a 2005 to 2009 situation where lenders were not collecting adequate paperwork and loans in some instances were made that were not in the marketplace's best favor, and that inflated prices and caused what we had happen in 2008, 2009. That's the exact opposite of what we have right now, where it is harder to get a mortgage, but only in the sense that it should have always been this way. Have credit, have money down, good employment, and that's what really is the foundation of our strong housing market that we have today. Okay, our next question here is, when building a new home, when do you pay? So, Brandy, can you tell us a little bit about that?
Sure. When you enter into an agreement with Keystone to purchase a home, you will be paying a deposit. That deposit will go towards your down payment. So your deposit is something you're going to pay in the beginning of the process, usually before the builder starts to build your home. Your down payment is not due until closing, which is when the home is complete and you're taking possession of the home.
Great. Now, Shelly, that's a little bit different than a construction loan. So can you tell us about a construction loan and when payments are due?
Absolutely. So with a construction loan, it is similar for the end loan that a deposit still needs to be given to Keystone when you sign that contract. And that deposit does until your home is complete. Once your home is complete, that construction loan will modify, or convert over into your end loan or permanent phase loan, which is your 30-year fixed or 15-year fixed, whatever loan program you choose. Another benefit of the construction loan is that your current home, if you own a home currently, you don't have to sell that home to start construction on your new home. You need that minimum 5% down payment. And if you have that money up front, you can start on this construction loan and continue living in your current home until your new home is done. And once your new home is done, chances are your current home will be sold by then. Then you can take the additional equity from that home and apply it towards your end loan, that permanent loan, reduce that loan amount, and have a lower monthly payment moving forward. So with the construction loan, the monies are going to be due before Keystone starts digging on your new home.
Great, thank you so much. Thank you. Our next question is, can you get a construction loan without a down payment? So Shelly, I'll have you start off here and give us some information on that. Can you get a construction loan without a down payment?
The construction loans that take place before construction begins does require a minimum down payment of 5%, but that's all. So if we want to, if we need a program with no down payment, we need to focus on the end loans only. And we provide quite a few different programs to meet those needs. And I'm going to ask Brandy to continue sharing all of those different programs.
Thanks, Shelly. Yeah, just like Finance of America, RMS is also available to do these end loans. End loans can be conventional loans, FHA loans, VA loans, USDA loans. I know this is a lot of acronyms that we're throwing at you, but they're just different types of mortgages that are available for new construction. One benefit of some end loans is there are a few different programs that will allow for 0% down payment, which is 100% financing, where we can finance the entire price of the home, including the options that you put into the home. A few of these programs would be a VA mortgage, which is for veterans of the United States. We also have a couple state and bond programs that also allow for 100%. If you are not eligible to finance 100%, we have many other programs with as little as 3% down.
Thank you, Brandy, and thank you, Shelly. So last question we have here, is it more expensive to purchase a existing home or a new home? And so I'm going to touch on that a little bit because of the benefits that are associated in buying a brand new home. A used home, you will typically find a lower sticker price or advertised price, but what you're not getting when you purchase a used home is the ability to personalize that house with your favorite colors, your selections. It's your design. And at Keystone in particular, we give you the option to configure the house in a custom manner. So you're making as few concessions as possible when you invest in a home with us. That's in addition to the financial benefits of having a warranty on your brand new home. So it's not possible for you to move in and have the heating and cooling system break or the roof leak and you get stuck with a bill. And then you also have to talk about the energy efficiency. The way that we're building these homes now is so materially different than the way they were built 10 or even 15 years ago. It is not a stretch to say that a new home will comparatively save $100 to $200 a month in your utility bills. And with interest rates as low as they are right now, a $100 or $200 a month savings equals $20,000, $30,000, $40,000 a month in sales price that you can finance. So a $400,000 existing home is the equivalent to maybe a $440,000 new home when you account for all of your total costs. So there's more to be considered when comparing a used home to a new home than just the price and the square footage. Well, thank you so much for joining us today to discuss the current state of the mortgage market and the most frequently asked questions when considering a new mortgage. I just want to thank Shelly Burkholder with RMS and Brandy Traber with Finance of America. Shelly, thanks so much. Do you want to say anything about RMS in closing?
RMS is based out of Maine, Portland, Maine. We've been mortgage banking for almost 30 years. And I think we've closed over $4 billion in loans last year. Our goal here at RMS is to gather all of our clients' information, personal, financial, home information, and educate them on the process so that they can make an informed decision on the best type of financing available for them. So I always look forward to working with all of our Keystone buyers. Thank you, Rob.
Thank you, Shelly. Thank you. And Brandy, thank you so much for joining us from Finance of America. Would you like to say something in closing as well?
Sure. Thank you so much for having me. Finance of America is a national company. We're actually located in 50 states throughout the U.S. While we are a very large company, our motto is business is always personal. So although you may be dealing with a large company, you're always going to be working with local people that are in the Pennsylvania or Maryland area. And we look forward to working with all of our Keystone customers. Thank you again.
Wonderful. Thank you, Brandy. And thank you to everyone who joined us today. Please visit KeystoneCustomHomes.com to find the right community and home for your particular needs. We look forward to meeting with you and building your dream home together. Thanks a lot.